Hi, welcome to the Market Alert for Monday, the 1st of February 2021. So, where to start is the question today. So, what I'm going to do, obviously, the main headline silver futures saw 8% overnight above 29 as Reddit hordes pile in. Obviously, the short squeeze is on, and I'm going to come to this in the second part. I'm not going to review the price action, but what I want to do is start off with the German DAX and the Dow and have a look, see what they're doing in reaction to this. And what that's likely to do today, because that affects Omni more than the silver side. And then I'll give you a brief history of how I got into silver and what I see going on at this point in time, and whether I'm actually excited or not about it. Okay, let's start off by looking at the German DAX, and Friday we can see that we had more selling to the downside. Market trading to the 78% retracement from this low to this high, and the market bouncing off this, having put in a low overnight. So again, they're determined to bring the stock market back despite the fact that silver is going in the same direction, because normally they go the opposite way because of the industrial aspect of silver. If the stock market's going down, silver tends to go down because there is deemed to be a problem with the economy, and there's going to be a less draw on the supply of industrial silver. But of course, that's now been broken owing to the Reddit mob and the Wall Street buyers as well. And what I mean by that, I mean the Wall Street bet, actually not buyers, the Wall Street Bet app, which actually saw it increase last week from 2 million accounts to 7 million, and they're expecting 15 million by the end of the week, with an average size of $5,000 in the account being played into the silver market as well. But anyway, I digress. So here we've got some upside targets should they be able to bring the market back to the upside, as against the tide of what's going on in the silver market. But that's the picture overnight. And if we just have a look at the overnight, you'll see, and we'll start off here with Sunday's trade overnight, and let's just compress it up so we can see where we are. And you can see once we got above the 200 MA, prices have just traded through the DP and now heading back up to the R1. So at the moment we're still long on this side of the market. The question is, of course, can it hold? And of course we don't know this until the futures market opens, but overnight they've managed to bring the market back to the upside. 38% is more or less the high as well, although I can't draw the fibs from this low because obviously this is still active at this time. So I'm going to use the high and the 38% for any resistance to the upside should prices move higher initially once the futures open. So the high of Friday will be an area of resistance. So Friday session, we saw the futures market moving prices higher. They traded up to the 200 MA and the DP level failed, and then you can see once they spiked back through, and then the selling took place in the initial part of the trading session there. Prices bounced off the 13,400 level, which you can see there. You've got the green bar with more volume in than the selling bar. Prices retraced and then moved back up to the DP, where it kept banging its head against this level, and prices then trading sideways, as you'll see through the morning, not a lot. And then we had this spike down, and this spike down was this. It took some finding, but there was an explosion reported near the Israeli embassy in New Delhi, and that is what was behind the drop in prices that we saw here in the DAX. And then of course it wasn't reported anywhere else, not in the mainstream, and then the market recovered immediately, dropped 100 points and then came back. But that was the news, if you're wondering what caused that to drop. And then in the afternoon, again, the market at that DP level trading down, puts in a double bottom across here. We then had a buy signal, the market trading up to the DP and then slightly beyond before prices then ran out of steam and started to move to the downside. We did have a sell signal there, which the market only traded down to the support. You can see them buying back in here So if short on this and you're seeing this sort of action at the 200 MA, then you've got to be aware that the market is likely to find some sort of support, which it did, and when they tested at this level, and then they brought the market back. Okay, let's have a look at the implied volatility, see what this has done during the session on Friday. You can see that this increased significantly up to 25.08. 33% is the sort of area I'm looking at for this to stop the downward move in the stock market. That would be in normal conditions. Of course, that didn't happen last year with the COVID situation. The volatility just screamed through 100% doubling. But here, if given that it would be a normal correction, as it were, then you would look for 100% increase. And we started down at 16, so 32, 33% area. But of course, that's dependent on what happens over the next few days and weeks with regards to the silver price as well. So here we're currently short in the Dow and short in the implied volatility as well. It's all red, so we've got that increase there, showing that everything, or the stock market, is short below the 20 bar moving average, which we've seen on numerous occasions before. News wise, there's a lot of news today, but I think that's not going to make a lot of difference, to be honest with you, if you want to have a read through that and see. But to be honest with you, I think it's going to be a case of what's happening in the precious metal markets and how the government are going to react to that, again, which I'll come to in just a moment. This is the news, lots of it, and unfortunately I don't like to show the low impact, but they keep lowering the economic news, and maybe they're just discounting it now and just saying, well, we're not going to bother anymore, let's just turn it all into low impact news items, and the fundamentals of what's happening with the virus, the debt, and everything else has taken precedence over it. I don't know, but it's just very strange. So as you've seen from the headline, silver futures saw 8% overnight rise above $29 as the Reddit hordes pile in, along with, of course, the Wall Street bets brigade as well. So there's really starting to take hold. And if you look on YouTube, type in silver squeeze if you want to see what's going on. I'm not going to explain it all in detail. You'll see here there's hundreds, literally hundreds of videos now. This is really starting to get some momentum behind it. So what are my thoughts on this? Well, what's interesting is this. They're starting off at the moment by piling into the SLV, which is a derivative of the futures. And also they've got the COMEX, where they've got the futures contract as well. And then, of course, there's the options. And this isn't the way to play it. If you want to corner the silver market, it is not the way to play it. But they have soon cottoned onto this, actually, with the likes of social media. They were able to get it around very quickly that, what we should be doing is looking at buying the physical. Because once you've cornered the market on physical, as the Hunt brothers did in 1980, was it? Yeah, it was 1980 when silver first went to $50. They've then got the banks over a barrel, and you'll see as last night all of the online bullion dealers all started to issue notices. They stopped actually selling online, and the ones that I've used as well, Bullion by Post, all of those others have stopped actually. They wanted to wait and see where the market opened, obviously for their own benefit, so that they could add that premium on to the physical metals. But the only way, if they're going to succeed at this and getting silver up to $1,000, as you see in all of these, they talk about $1,000 to the upside being a target, then the only way that they can do that is to actually buy up all the physical metal. Now, what they're doing, is it a good idea or a bad idea? Well, I don't know really. I'm sort of ambivalent about this one, because it's going to cause a major issue. I mean, I bought silver, as I've stated in the video that I recorded back in 2016, End of the Financial Road Part 2, about becoming your own central bank. I've always had a passion for silver, and I've traded it for years. And I started out my trading life trading options. This is me back in 1992. I had two computers linked together. This is before the internet, and these were linked to a satellite dish where I paid £600 way back then per month to have the live data feed coming in. And here's some of the contract, or one of the contract notes where I was buying silver at $5.50. These were call options and doing all sorts of weird things, debit spreads and whatever. I wish silver was still $5.50. And bearing in mind, this is 1992 and silver was $50 per ounce. So you can see in 1980, so you can see how volatile this market can be. So silver and I go back a very, very long way. And as I stated in this, because of the debt from the last 40 years, or 50 years actually, this August, when Nixon removed the gold standard, it's just it made perfect sense to own physical metals once the debt starts to implode and they have to revalue gold as they did way back in the 30s after the Great Depression, that holding the physical silver would be a way of insurance. I mean, it was so cheap and still is cheap on that basis. I mean, adjusted for inflation, silver should be $600 an ounce based upon the 1979-80 price. But it's not. And this is why the Reddit mob have seen that it's so undervalued that they could force the hand of the bankers. But it's a dangerous game. This isn't going to be like forcing the price up on game sport or against a single hedge fund. Here you're dealing with central banks right up to the BIS, the IMF and the World Bank, and they've got the tools to use in order to slam the price if they need to. So this is not a game for the novice. There's absolutely anybody that's jumping into this and starts buying silver futures, for example, a $1 move is $5,000 for or against your position. Very dangerous game. And that's why if you want to corner this market and you want to force the price, then you've got to go down the route of buying the physical metals, which is something that I've done for years. Those who know me, that I've recommended it to, all thought I was insane and mad, but maybe that's not the case anymore. And I didn't buy it initially as a hedge against inflation or anything. I bought it because it was so cheap, having followed the silver price since 1993. And then 2011 it went up to $50 an ounce, and then it was slammed back down by JP Morgan's manipulation. And that's all in that video that I've just shown you there. I'll put a link in the email. So cheap, and if they're forcing it down, they're worried about something. And if they're forcing it down, they want to buy it back cheaply. And it's rumoured, and I can't state factually, that JP Morgan are holding something like 600 million ounces of silver, which they had off the Bear Stearns bank when that went bust. They picked up that tab, and they've been adding to it by forcing the price lower. They've been fined over $1 billion last year. So yeah, I can see the attraction of forcing the price up through the small people coming in and buying up the market and forcing their hand and trying to bankrupt some of the banks. But it's a dangerous game because it's going to affect everybody from a social conscience point of view. This wasn't why I bought it. It was bought purely and simply as a hedge against inflation, and then one day resetting the value of gold, which would then bring up the value of silver, to write off the debt, not the market being cornered. But it is what it is, and you can see here that the SLVs on Friday, record high there of funds inflow, massive. Highest on record, and I should imagine that this is going to continue. But like I say, that's not the way to play this game. If they're going to play it and you want safety in this game, the best thing you can do is just not that you can do it now, because depends how much metals are left. I mean, if we have a look at this video here with David Morgan, who's a veteran of this game, there was a video that I saw this morning where he said that there's no physical metals left around. I mean, people took advantage over the weekend and started buying it up. I did see it earlier, but yeah, I mean, if you type in David Morgan, I mean, he's been in the silver game for 30 odd years or more, written books of 500 pages about the manipulation and what's going on. So yeah, we've reached a tipping point, really, and it's going to be interesting to see what the banks are going to do, but more importantly, what the government's going to do, because you've got to remember that an executive signature from Biden could create havoc. And the other thing as well with this, as they've done with Bitcoin in the UK, you can no longer trade derivative bets on Bitcoin. That came into force on the 1st of January. So I would imagine that the spread betting companies are also going to stop people buying positions on the spread bet platforms as well. Purely and simply because of volatility, and also because if the market is forced up to $1,000 per ounce, then they stand to lose a lot on that basis as well. So, well, the exposure, but they will hedge that anyway. That's why they're in business as spread bettors and there for the long haul. And IG has been around for years, and that's why, because they will hedge the situation. But it will be stopped. And again, it's another freedom that's taken away from us as retail traders. So on the one side, and it looks great, yes, the silver price is actually going to go up. I've been waiting for years for this. Like I say, been looking at this for years, the last 30 odd years. And it's now coming to fruition, but, it's like I say, the excitement is tempered by the fact that the government can do whatever it wants to do. And so can the banks. This is not a play against a single share. This is against the world banks, and that's going to be a tough one to pull off, in my opinion. But we'll see. We'll see if it comes off. It comes off, and if not, then we'll just have to wait until they get to the point where the debt has to be revalued, and the price of gold is revalued as well, and then go that way, because that was the reason and the rationale for buying this in the first place. This is just something that's come out of the blue last week, so like I say, we'll see, and you'll see that detailed in the video that I actually recorded back in September 16. So like I say, this is nothing new to me. It's something that you've seen in the market alerts over the years as well. Okay, I've waffled on long enough. Like I say, if you want to see this in more detail, I'm just explaining my personal opinion. And there's David Morgan there. Like I say, veteran silver man. Always sound, solid advice. No extravagant targets or anything like that. So, yeah. So anyway, like I say, this is just my personal take on this. It's come out of nowhere. And we'll see what happens going forward in the next few days, but certainly interesting times. Okay, that's it for this one. As ever, thanks for watching. See you in the next.